Then in May, we did fundamentals of partnership firm, valuation of goodwill, and we started change in profit ratio.
Okay. So TD06, TD19, TD22, what does it mean?
I'm not sure about that. I think that's like a deadline to complete.
Okay.
It's just a basic format for what should be done in those months.
Okay. So financial statement of a company, financial statement analysis, and tools of financial statement analysis. These topics we have to discuss. Yes.
Yes.
Yes. Today is 20th May. Okay, so what we were discussing in our previous class.
We were discussing about the previous topics in 11th.
Oh, yes. Okay. So we'll start with the financial statement of a company first. Okay, is there any test nearby you have?
I had my first test on Sunday.
In school?
Yes.
Okay, and the next test will be on?
For accounts, it'll be in September or October.
What about this? This
Yeah,
is already complete.
yes.
So the next unit test will be in September.
September, October.
Okay. Until then, we'll try to complete most of these topics. So you want me to start financial statement of a company or any other chapter? Because that test is already conducted. So in the next test, there will be another chapter.
We can start with cash flow.
Cash flow statement directly.
Yes.
But to understand cash flow statement, you have to remember some part of financial statement also.
Yes.
So then we should start with financial statement then.
Okay.
Okay. Okay, so it is 20, my financial statement of a company. Actually, we have discussed this, not with me, but you have already studied this topic, financial statement, in 11th also. But that was about proprietorship business. Now you are discussing company financial statement. So do you remember some part of that financial statement or final account?
Of the 11th or 12th?
Yes, we have discussed some part of that in previous class also. 11th, trading account, profit and loss, balance sheet.
Yes.
Yes. So in financial statement, the main purpose of any business is to earn profit. Yes.
Yes.
This is the main objective. Now, if we are earning profit or not, how we will know this? So for this purpose, we prepare financial statement. So financial statement is combination of two statement in a company, mainly two. There are more, but mainly two we are talking about here. One is called income statement, and the other is position statement. Position statement. Okay. So what is this income statement and position statement? Income statement tell us about the performance of a company, financial performance, like uh, how many expenses are there, total expenses we have, total income we have earned during the year. We compare these two things, like total income of business during a particular period, and then total expenses of a business during that same particular period. We deduct expenses from the income and we get the result. Okay. So the main objective is to earn profit, and to know that we are earning profit or not, we are preparing financial statement. Same as any student who is studying during the year, whole year, then he wants to know that how is his performance during the year. So for that purpose, there is examination. And after examination, there is result. So after seeing the result, you know that yes, this is my marks or like grades, and that is what I have performed in this particular year. So same as the student, a company wants to know about the profit, and income statement will tell us about the financial performance of a company for a particular period. So that particular period can be 3 months, 6 months, or a year. Okay. So it can be different period. Income statement. Now, what is position statement? So position statement tell us about our financial position, means how much assets we have, how much liability we have to pay on a certain date. On a certain date. So you have to remember this, that income statement is prepared for a particular period. And position statement is prepared for a particular date. Now, what does it mean? It means like the result is not related with one day. It is related with whole year or 3 month or 6 month. So that's why at the end of year, we prepare these two statements, and in income statement, we write for the year ended. For the year ended. You remember we write this for the year ended?
Yes.
Can you tell me in balance sheet what we write?
Um, for the balance sheet,
It is as on or as at.
as at 31st March
Yes.
2025.
So this is what it means. As on or as at on a certain date. So particular date, and for the year ended. For the year ended. So particular period. Okay. So this is our actually basic information about financial statement of a company. Now you can see that this is the definition. Financial statement is a statement which shows the financial performance for a certain period and financial position on a certain date. It is expressed in monetary terms because we always record the transaction in monetary value, like in form of money. So that is why it is expressed in monetary terms. So please write this definition. Uh, After that, we'll discuss these features of like financial statement. Please write the definition first. Tell me when you have completed.
I finished writing.
Okay. Now we will talk about features. So features, financial statement is related to past period. Therefore, it is a historical document. Actually, this is a limitation for financial statement also. We will discuss it later. But financial statement is a historical document. What does it mean by historical document? Means it is recording only the past items which is already happened in the business. Okay, it cannot record the present item, it cannot record future item, it only records the past item. So it is a feature of financial statement that it is a historical document. The second is it is expressed in monetary terms. So there are some items or transaction that is happening in the business, but there is no money involved, or you cannot measure it in monetary terms. So that's why these transaction is not recorded in the books, because in financial statement we record only those items which can be expressed in monetary terms. Now, what does it mean? Let me explain. Like if there is any employee working in a company and the quality of employee is very good employee of our company, and other companies in the same area of business also wants to hire that person, that employee. Okay, so he is working for us right now, he is very good employee. Can we calculate the value of his quality? Should I repeat my question?
Yes.
I'm saying he's very good employee. Everyone wants to hire him in the same business area. Okay. So the question is, can we calculate the value of that employee?
No.
Yes or no?
No.
No. Okay. Can you tell me why?
Because it's not a monetary thing. You can
Because
take.
it is qualitative factor. It cannot be measured.
Yes.
So, like I'm teaching you, if you think that I'm a good teacher, then you cannot calculate the value. You know that yes, I am good, but you cannot calculate the value. Yes, you cannot say like yes, the value of the teacher is 1 lakh, 5 lakh, 10 lakh. No, it is not possible. Yes.
Yes.
In the same manner, if I'm saying that yes, Maria is a good student and I have to evaluate the value. I cannot say that yes, his quality is worth 5 lakh or 10 lakh. I cannot say this. So this is quality, and quality cannot be measured in monetary terms. So there are certain things in the business which cannot be measured in monetary terms, and that's why we never record it in the business. Is this clear?
Yes.
Okay, so it is expressed in monetary terms, and only financial items are recorded. It shows the financial position of a company on a certain date. I have already explained this, that financial position means how much assets we have, how much liability we have. It is related to on a related with a single date. Now, it is also confusing. Sometimes student asks, sir, can you explain this, like how the financial assets and liabilities are related to a certain date? So let me explain. Right now, if I ask you, uh, how much money you have right now. Actually, don't say zero, say some value so that I can say the example.
200.
Okay. Okay. So let's say 200. Now, if I ask the same question in our next class, let's say after 2 days, okay. So will the money will be same in your hand, or there will be any change, like you have done some expenditure, you have received some more money from someone? So do you think there will be some change in the value?
Yes.
Yes, there can be, or there may be not. the situation remains same. So you have same amount of 200. But the chance is, yes, it can be different amount. So it means like today you have 200. After 2 days, let us assume that you have 250. So your asset, that 200 is your asset, and it changed after 1 day, after 2 days. Yes or no? So
Yes.
today our asset is 200. After 2 days, our asset will be 250. So that is how financial position is related with a certain date. On different date, there can be different type of assets, different value of assets. On different date, there can be different value of liability also. So that's why financial position always relate with a certain date. Is that clear?
Yes.
The next is it shows the financial performance for a certain period of company, a certain period of, yes, for a certain period of a company. So financial performance means like result for whole year. We are doing transaction for making profit, and we want to know that how much money we have earned during the year, how much profit we have made. So it shows the financial performance for a certain period of time. Now, next is financial statement provides important financial information. Now, what is important information? First of all, if you're doing a business, you have to take different type of decisions for better operation. You have to take different decision. Now, for this decision making purpose, you need some information, because when you take decision on the basis of certain information, then that decision is good. If you are taking decision without knowing anything, then it will be very bad. Like if we are going somewhere, and we don't know about weather. Okay, we don't know about the weather condition, and we didn't keep the umbrella with us, and in between the way, now it is raining. So it is very difficult now. It is problem for us. But if we have known about this weather condition, then we have keep this umbrella for the way. Yes.
Yes.
So the decision can be taken with or without information, but without information, decision is not a good thing. If you are going somewhere, you have to choose a way. You don't know about any way. Okay. So then you cannot choose a good way to reach somewhere. But if you know about the road, then you can say that yes, this road is good, this is shortcut, we can go from here. That is the good decision. Okay, so in the same manner in business also, we have to take different type of decision, like that employee is good, we have to do business like this. So anything that we have to take decision. For that, we need important financial information, and that information we will get from financial statement. Okay, like profitability of business, solvency of business, cash position in the business, assets we have, liabilities we have to pay. All these information we can get from financial statement. So these statement will help us in decision. So number 5 and number 6 point is this. Tell me if you have any doubt. Okay, so please write this, the features, then we'll talk about some advantages and limitations. Actually, not advantage, first we'll discuss the users.
We finished writing.
Okay. The next is users of financial statement. Yes. Actually, this we have already discussed in 11th also. So this is same in the 12th. There are different type of users of financial statement. Now, who is the user of financial statement? The people who has some interest in the company, any kind of interest. Like there is some benefit or loss that can happen due to this information they don't have. So that's why there is some users of financial statement. Now, on the basis of their relation with the company, it is divided into two parts: internal users and external users. So first, internal users. There are three internal users that is written here: shareholders, management, and employees. Now, shareholders is the owner of the company. It is owner of the company. Management is running everything. So it is like operating the business. And employee is working for the company. So owner wants to know that he's earning good profit or not. It is sufficient for the capital invested by the owner or not. Okay. So shareholders, owners, always they have interest in the business. They have the actually highest interest in the business. So that's why they want to know about their business. So they will get the information from financial statement. The second is management. Now, management is doing everything in the business for the owner, for the employee, or some other persons also. So management is doing everything. He wants to know that his actions has some result, some positive result, not only result, has some positive result in the business. So that is management, and he wants to know about profit or loss of the business, financial position of the business. The third one is employees. Now, employee is working for the company. He is giving everything. He has obviously his time and his efforts for the company. So he wants to know that am I getting a good salary? And if company is earning good profit, then should we get a bonus or not? Should we get some addition incentives or not? So for this purpose, employee wants to know that company is earning profit or company is in good position or not, because it is obviously their life depends on it. An employee is working for long-term purpose in a company, and if he know that company is not in good position, then he will change the company. He will leave this company and join some other company. That's why employee also wants to know about company financial position, company financial performance. So these are internal users. Now the external users. So external users, bank and financial institution, these will give the loan. So they have already given the loan or they are going to. So in both of these situations, they wants to know about financial statement or financial information about the company. Why? Because they want to save their money. If company is in good position, they will know it by seeing the financial statement and they can give the loan. But if the company is in good bad position, then there may be some problem. Like if they will give the loan to the company and company will be bankrupt, insolvent, then they will not get their money back. So that's why bank and financial institution wants to know about the company. Actually, investor, creditors, these are the same thing. Creditor and banks and financial institution, they have the same interest. Investor and shareholder, they have also the same interest. So investor is also wanting to invest some money into the business. So he wants to know about business. Now there is government taxation authorities, SEBI. These are all government departments. First of all, taxation authority wants to know that company is not manipulating tax. Company is not manipulating his profit so that they can avoid tax. Okay, so that's why taxation authorities check the data submitted by the company. Okay, so income tax department, there is GST department, there is sometime before there was sale tax department, excise, custom duty. So there are different taxation department under the government, and they want to know about the company. Then there is SEBI, Securities Exchange Board of India. Securities Exchange Board of India is also part of government. It is a government department, and it operates for share market. Okay, so their work is to regulate the share market, to check that is there any illegal transaction happening in the share market or not. So if there is any illegal transaction, then they can find and catch the person and put a penalty. So they have to pay the penalty, and there can be jail sentence also. So SEBI is a regulation department for the government. Okay. The third is government. Government wants to know that company is working for the interest of public. Interest of public. For the interest of government. Like if company is working with bad intention, then company will harm the public and government too. So that's why government wants to know about the company situation. These are users of financial statement. Please write this.
I finished writing.
Now there is limitations of financial statement. Actually, historical record is also the feature of financial statement. If you remember, I have just told you that this is the feature also, historical document. And this is the limitations, means problem with the financial statement. So that is called limitation. Now, what is the problem in historical document? Actually, we have to say that to estimate the future, to know about the future, you cannot use the financial statement. It is the feature of the financial statement. So we cannot say that it is a limitation, but yes, it is given in the book. So obviously, it is a historical record. We cannot record the present data, the future data. So that's why it is a limitation for the financial statement. The second is based on estimates. Now, there are certain factors, certain things in the business which is based on estimate. Like we don't know the exact figure, exact value. So what we do, that we estimate something. Like I will give you one example to understand this. You remember the chapter of depreciation?
Yes.
In depreciation chapter, there was two concepts. One is scrap value, and then useful life. You know about these two?
Yes.
You remember this?
Yes.
Okay. Can you tell me what is scrap value?
Scrap value is like the amount which is like you will minus from the asset for the formula so that you can find how much is getting depreciated.
Okay, so scrap value is just a value to be used in formula.
Yes.
Okay, but what is the actual meaning of scrap?
Scrap is like the remaining value.
Yes, when there is no use of any machinery or assets, then at what price we are selling it, that is called a scrap value. Yes.
Yes. Yes.
Now, useful life.
Useful life is like how much more the asset can be used for how
Okay.
many
So,
years.
yes, very good. So, useful life means for how many years assets can be used. Now, can you tell me, is it sure that we can use any asset for that long time purpose? We are sure about any asset useful life?
Maybe we can, but it'll keep getting depreciated every year.
No, I'm not talking about appreciated. I'm talking about only useful life. Like in the question, it is generally written that useful life of an asset is 5 years, 10 years, 15 years. Yes.
Yes.
So at this point of time, how can we say that this fan can be used for 10 years?
Because of its um depreciated value.
But is there any basis of surety that yes, it can be used?
No.
No, obviously no. Because if we purchase a mobile phone, let's say, and we estimate that it can be used for 5 years, it happens sometimes that it can be in bad situation after 2 years only.
Yes.
It happens. So yes, we cannot say for sure that the useful life of asset will be this. It is just an estimation that we are making. Like it can be used for 10 years. But what if it will destroyed after 8 years? It will not work after 8 years, after 7 years. It can happen. Yes. So it is just an estimation, and the actual life can be different. Like when I purchase a bulb, okay, I receive a guarantee of 6 months. Guarantee of 6 months. Okay. What does it mean by guarantee? Guarantee means yes, it will work for 6 months. There's no doubt in that. But sometimes what happens? It is not working after 2 months only. So we go to the shop and take another bulb for the fused one. Yes.
Yes.
So you can see that they have given the guarantee of 6 months. Then also the bulb is not working. So that is why I'm saying that useful life is just an estimation. You cannot be sure about any asset's life. So it is just an estimation. Also, after 10 years, what will be the scrap value? How can we say that? We don't know the scrap value. Let's say I have a bike. Actually, I have a bike. Okay. Now I have purchased this bike for 1,20,000. Okay. And I have estimated that I can use it for 6 to 7 years. So after 6, 7 years, how much price I will get for this bike, I can just estimate that. It is not a surety. Yes. So scrap value is also a estimation. So on these two estimation basis, we calculate depreciation. Yes or no?
Yes.
So it means depreciation is also based on estimation. It is not the real value we are depreciating. It is just an estimation. So that's why based on estimation and estimation can be incorrect also. So that's why this is also a limitation. The third is different accounting practices. Now, there is one feature, one quality of financial statement that it helps in comparison. What it do? It helps in comparison between two company data. Okay. Now, if one company is using some other method and this company is using some other method, then we cannot compare these two companies, because for comparison purpose, there should be at least one thing in common. If there is no common item, then we cannot compare any two items. Like, for example, let's say that if I take a mathematics number, actually I have explained this before also. If I take mathematics number of one student and English number of one student, then can we compare these two?
No.
Can we compare mathematics marks of one student and English marks of another student? No.
No.
Okay. Can we compare mathematics marks of the same student with his English marks?
Yes.
Why?
Because to compare, you need the same type of subject.
Yes, because mathematics should be compared with mathematics, but we are comparing the mathematics with English of the same student. Why we can do this? Because the
Because,
student is same.
yes.
Okay, we are comparing his performance in mathematics and English. So this is how a comparison should be. So if a student is common, we can take different subject. But if a student is different, then we have to take common subject. Is that clear?
Yes.
So that's why for comparison purpose, we need same practice or common factor. So if there is different accounting practices, then it is very difficult to compare the data. Is that clear?
Yes.
The next is qualitative factors are ignored. Qualitative factors. Just now, I have explained this, that quality of employee cannot be recorded in the books. Yes?
Yes.
So that is what qualitative factors mean. So any quality of product, any like good behavior, good quality, good communication skill cannot be recorded in the books, because these are quality, and quality cannot be termed in monetary value. So if it is not in monetary value, then we cannot record it. The last one is price label changes are ignored. Now, you have recorded sales or purchase in trading account. Yes. Yes. Or no.
Yes. Yes.
Okay. Now, which part of sales is recorded in the books? The quantity, the price, or total value?
The price.
Okay. Let me write it in value then. Let's say we have sold 10 quantity of one item. The price was 1,000. So the value is 10,000. Now tell me which one will be recorded.
The value.
The value. But you said price before. Yes.
Yes.
Okay. The value will be recorded. Always you have to remember that value is recorded, not the quantity, not the price. Okay. So if the value change over the year, now in the next year, the value is 20,000. Okay. So from 10,000, it is 20,000. So this is a good sign or not?
It's a good sign.
Yes. Our sale is increasing. Yes.
Yes.
But let me change the situation a little bit. The quantity remains same and the price changed. It becomes 2,000. Now tell me, is it a good sign again or not?
It's not a good sign.
Because
The
there
price
is no
increased.
increase in sales. Yes, only price increased. That's why our sale increased, sale value increased. So quantity is same. We have not changed the quantity. What is our main focus? To increase our sale in quantity terms, not the value terms. Value is increasing. It is due to increase in quantity also, increase in price also. But increase in price is not in our hand. It is market situation. So if market is good or bad, it doesn't matter for us because we have to increase our sale by increasing our quantity. And if our quantities is same, only price change, then it is not a good thing. Yes.
Yes.
So now sale of 1 year is 10,000, sale of second year is 20,000. Anyone who will see this will know that yes, company has performed good. But any person who knows in detail has the information about this and he knows that no, company has not performed good. It is the same. This is not good, it is bad. Yes.
Yes.
So that is what price label changes are ignored. Means we never record the quantity and the price. We only record the value in our financial statement, and that is not a good thing. Is that clear?
Yes.
Please write this also.
Okay. I finished writing.
You are very fast in writing. Do you write everything or take the screenshot only?
No, I write.
Then yes, you are very fast. Can you show me your writing?
I can't take a picture right now.
Okay. Okay. You can share it with the team on WhatsApp and they will send me.
Okay.
Okay. So the next thing is contents of annual report. Actually, yes, you are very fast. This will take some time to record, but you have done very fast. The next is contents of annual report. Okay. So there are four things which is included in annual report. First of all, what is annual? So annual report means like after completion of every year, we prepare our financial statement. And there are some other records also that we prepare at the end of every year. So at the end of every year, we have to submit these reports after preparation to the government. Okay. So we are giving it to the government and government will verify, check all the details, and then it will accept the data. So we have to submit this to the government. So what are the contents of annual report? What are the things that we include in annual report? That is, we have to understand. So the first of item is board of directors report, auditor's report, financial statement, and director's responsibility statement. There are some other things that we include also, but it is not in your syllabus part. Only these four items are given. So there are some segment report and tax related items, but we have to study only these four. First is board of directors report. Now, what is board of directors report? In this report, board of director will record all the operational main points of any year. Okay, they will like what is the main area of our work, how we have performed during the year, what is our expectation in the future, is there any future contract with very huge value. So all these items are recorded in board of directors report. Okay, so future of company, the profitability of the company, these things will be. The next is auditor's report. Actually, before auditor's report, you have to understand director's responsibility statement. What is director's responsibility statement? It means that directors have some responsibility in the business, like preparation of financial statement, operation of business, like all these things. Apart from these, there are some other responsibilities also, but that is different one. You will not understand this. So you have to remember, like they have to operate the business, they have to prepare the financial statement, and like any cash problem they have to manage in the business, fund flow statements, all the things they have to prepare. So these are the responsibility. There are certain other responsibility also. So all responsibility will be included in this director's responsibility statement. They have to acknowledge that these are our responsibility and we have performed our responsibility in good manner, in a good way. Okay, so director's responsibility statement. Next is financial statement. Financial statement, it includes the statement of profit and loss, balance sheet, cash flow statement, notes to account. So there are different items that we include in financial statement. We have to report all these to the government. After that, the last one is auditor's report. What is auditor's report? Auditors are the person who check the financial statement. That is there any discrepancies? Is there any problem with the financial statement? Everything is correct, presented in a good way. These things are verified by auditors. Okay, so auditors actually are chartered accountant, which is appointed by the company, verified to check this. So auditor will check and submit his report to the company and to the government. So auditor's report is also part of annual report. Please write this.
Okay.